Okay guys, so since Saturday we have seen Cardano drop by 10.52%, coming down into this range of previous support, actually kind of a little bit losing it here and consolidating just a little bit lower than the previous support levels. In today's video we are going to be taking a look at the technical analysis, kind of giving our thoughts and opinions as to where we think things are going to be heading next, and all that kind of wonderful stuff. So do smash that like button, subscribe if you're new, and let's get into it. So in the last TA video that we put out a couple days ago, we were thinking that the wave 4 was done down here, okay, specifically with this breach up here. However, with this most recently, it's an indication that this has not yet bottomed out. Okay, so that's going to be the premise of what we're starting with. And obviously, the lower that wave 4 goes, the higher that wave 5 has to go. They relate to each other. Let's go ahead and zoom out. Let's kind of put in the kind of breakdown of the bullish structure. As you can kind of see, it happens here at 65. No, it's actually this one down here. Let me go ahead and snap this to the correct wick. It is indeed that one right there. 63.49, sorry. This one is the previous wave one. This is the wave one for this bigger structure. Okay, so if the price action comes down lower than 63.49, then we break this structure and there is no wave 5. We remain above 63.49 cents, then we are looking for the wave 5, okay? Let's go ahead and take a look at the wave 4, okay? We can see it's very corrective with the overlapping nature of the candlesticks. Even this most recent push to the downside has bounced higher than the previous swing lows that we had. So it's an indication that this is not a trend to the downside, okay? So this is actually a more short-term move, not a trend according to Elliott wave. Let's go ahead and take a look at where we think typically these kind of structures can land. Can move this entire structure, measure this entire structure here, move it over to our bounce, which was this wick right up here. This was 1500 hours UTC on Saturday, the 3rd of May. The high was 72.97. Okay, and I'm just going to adjust this accordingly. So yes, actually I can snap it to it by picking it up and then trying to grab it and move it directly onto there. There we go. Okay. So with that said, you can see that we would typically then be looking between 63.29 and 65.03. This basically is the 1 to the 1.236 fib levels. So I'm going to draw a little yellow box in here. Minimum expectations were met when we went down lower than the previous swing low. So minimum expectation for this move was 66.47 cents, which has already been achieved. So although there's still the potential move here to the downside between the kind of 63.29 and 65.03, noting that of course 63.49 is the break of our structure, there's no guarantees, right? But it looks likely to be that this is where we're likely to find the reversal and where we then start thinking about the next moves to the upside. Okay, so I'm going to remove the fibs. We're then going to measure again from the top here of our wave 3. Down to, we're going to be conservative. We're just going to put it on here at around 65.02. And then we're going to adjust our targets again. The lower that wave 4 goes, the higher that wave 5 goes. And this goes out towards 1.236 to 1.618 on the fib scales. So we're looking for 77 to 81 cents then, okay, as it sits today. But if we go down lower, then of course it'll be higher, the target will go. Okay, so this is kind of what we're looking at the moment, and it's looking very interesting in this kind of pattern on this 1 hour time frame for this progression to the upside. Taking a look at the stochastic RSI, it's up in this heading up towards this overbought area. So again, this is going to be an interesting kind of concept as to whether or not we find ourselves, you know, basically getting suppressed by the 50 EMA, 50 SMA back down into this lower range to complete out the structure. And of course, you know, with our hourly stochastic RSI being high, but the 4 hour, 8 hour and dailies being oversold, it's an indication that this is potentially going to be the area where we want to be going long. Okay, so that's going to be the idea. We're going to be looking for long positions. We're going to put the take profit up here into that kind of 77-cent range. We can either do market entry right now, stop loss lower than 63.49. I'd actually put this around 62.88 for coverage. And you can see that this trade idea would actually be a 3.58 risk reward ratio, even though I think there's going to be a better entry that could even give us a better risk reward ratio. Okay, so if you want to know exactly my entries, my exits, my take profits and things like that, if I am of course trading this one, which is a high probability of, and you can join the free Discord server. It's linked in the description down below, and you can join the profit pit using the bot down in the Discord server. And yeah, from there, you'll be able to see, exactly what is going on. To gain access to that free channel, all you have to do is be in the free Discord server, linked in the description, and actively trading on one of the exchanges that we have an affiliate link with, whether that's BitGet, Blowfin, Mexi, BitUnex, Bybit, etc. All the links are in the description below. They're also in the free Discord server. And by trading on those exchanges, you'll get access and you'll be able to see what I'm doing in real time, but also see what JB is doing in real time as well. Okay, all in the free Discord. So for more details, join the free Discord, right? But yeah, it's a good idea. I think this one, in terms of risk management, it's there. It obviously is part of the structure. The stochastic RSI is aligned to this idea. Better entries also. So yeah, I think this is kind of what we're going to be looking for. I'm going to leave that on the chart here on the 1 hour for now. But that's where my mind is at here when it comes to Cardano on the kind of smaller time frames. Now, the stochastic RSI, as I said, is looking reasonably high. It can still go higher, but I think we're going to be seeing a bit of a correction. We're lower than 50 on the relative strength index. Again, I don't see any kind of major concerns there at this stage. The MACD histogram, this is of course showing everything kind of coiling up. So we are going to be looking at a break in the coming days, in my opinion. So let me draw in some lines so you guys can see. I'll draw these out quite wide just so you kind of get an idea of the scale of what we're actually talking about. So you can see here that this is kind of like narrowing down, right? There's weakness on the buying, there's weakness on the side, on the selling side, and essentially this is going to have a break. Now, our structure is actually bullish on the larger macro timeframes, and so I think what this is telling us is essentially that the market is just in this kind of boring accumulative phase before the next big break to the upside. So this is a good sign. I'm not too concerned about it. I do expect, to see a bit more of a decline, but we are looking for this move towards our fifth wave high. Once we complete the fifth wave high, then of course we'll be looking for more corrections to the downside, where lots of people will call it a scam coin and all that usual stuff because they don't understand the markets. Anyway, let's go ahead and roll this up into a daily time frame. On the daily time frame, we have lower lows and lower highs with overlapping candlesticks, indicating a short-term move to the downside. That's exactly what we've been experiencing since December. Okay, this is quite a boring kind of shakeout phase where there's a lot of accumulation happening from the smarter investors, and a lot of the impatient retail investors are just getting shaken out of their positions, thinking that everything is over. You sell up now because we're in a bear market, or come back in 3 or 4 years. Like, essentially, it's the wrong narrative. It's the wrong idea. It's not what the data in the charts is telling us. It's not what the on-chain data tells us. It's not what the macro economy tells us. Essentially, everything is actually telling us that this is going to be gearing up to be one of the biggest bull runs that we've seen for a very long time. And the candlestick nature here is telling us that there's basically just liquidity hunting going on, but with all of the overlapping nature of the candlesticks tells us that it's short term, not long term. So it's not a trend to the downside, essentially, right? That's the difference between short term and long term, is one is a trend and one is not a trend. Short term is not a trend, long term is a trend. So we have long term price action, which is this trend to the upside, followed by short term correction, not a trend to the downside. Now, obviously, as I've been through this many times before, we scoped out 22 cents over here when we were in 2022, right? After the previous all-time high, we was talking about 22 cents for Cardano. We thought maybe we had kind of topped out at around 23 cents or bottomed out around 23 cents. But actually, it turned out it just took a little bit longer. It was 2023 before we actually got there. Once we hit the 22 cent area, and put that back, we had our first distribution event, which was this one right here, followed by our first accumulative event. Okay, that was then followed up by a fantastic surge up into distribution, followed into the accumulation, right? So what we've seen and what we've tracked so far is playing out beautifully well. Right? Anyone who's going to been around on this channel for a while will know that I was talking about dollar cost averaging anything lower than 42 cents. That was this accumulative area right here. Then we got this trend move to the upside into the distribution event, which we were hoping, to be fair, would go up a little bit higher, but it was unable to hold. Okay, so this was basically between $1.01 and $1.37. Then we have the next accumulative phase. The cumulative phase is between 27.25 and 53.95. We've tapped the upper area of this twice already. Now, I can't rule out that we can't come down lower, because it's always a possibility. But, for the most part, there's no guarantees that we have to come down, and there's no guarantee that we don't come down. All I'm saying is that if we do see a price action dropping down lower than 53.95 cents, well, that's exactly where you want to be dollar cost averaging and buying. But even at the current prices are around 65 cents at the point of recording, the upside potential is so vast, I don't think I would mind dollar cost averaging at those levels either. So as we kind of think about it, we got some really good growth. We're looking for new all-time highs, $3.12 to around $4.77 on the kind of lower conservative side. We then have our kind of more kind of ambitious, but still achievable kind of targets sitting in here between kind of $5.27 and $12.91. And then of course you've got the Moon Boy targets up there at $38. So like the price action to me is still looking very good on the daily time frame. Our stochastic RSI back in this oversold area, okay, as we can kind of see down here. And so again, looking for another big run to the upside. The last time that we were here was actually down in late March. We did see a bit of a bump to the upside, but nothing too major. The time before that obviously was down here in February. And of course, well, you know what happened back in November. Okay, so price action is kind of in line with that kind of idea that we're getting closer to a point of, good growth. Now, in the last TA video, we were talking about how we were struggling with the 200 daily exponential moving average. You can see here, we were talking about the potential for a push to 77 to 81. Again, that still remains true. But we were looking at the suppression of that 200 exponential moving average. And it's good to see that it's correcting down a little bit more. And then I think we're good for a launch out towards 77 to 81. This is going to be right in line with some of these other previous areas of resistance, which you can kind of see coming in across here as well. So for Cardano, the price action is looking good. I'm not concerned about anything. It's just great opportunities for dollar cost averaging, for trading some leverage areas if you want to. But yeah, for the most part, I think we're still right on track for some pretty lucrative gains throughout 2025. If you found this update useful, informative, smash that like button if you're new, subscribe, and I'll catch you in the next one.